and thank you to the IIF for having me. I'm Jared Scharf, President and CEO of Desert Gold Ventures, and we'll just get right into it. So Desert Gold is a mineral exploration and development company with a regional land package. By regional, I mean it's an outsized land position of 440 square kilometers of contiguous ground in Western Mali. And this is a tier 1 mining jurisdiction, as I'll get into in more detail in the following pages. We've been active in West Africa, the management team, for well over 10 years, and I'll touch on some of our attributes in the region as we get into it. Our flagship project at the Senegal Mali Shear Zone project, are also known as the SMSC project. It's named after the regional feature that hosts, or is related to, geologically speaking, all of the major operating mines and large gold deposits in the belt. And we'll touch on that in more detail. Towards the end of 2002, we put out a maiden resource of a combined inferred, measured, and indicated of about 1.1 million ounces at an average grade of about 1.15 grams per ton. These gold resources come from 5 separate zones, of which are all open and are poised to get significantly bigger. But in addition to those 5 gold zones, we have 19 other gold zones that don't have resources on them yet, that are also open. And with more work, we'll likely convert new zones into resources, and I'll touch on that as well. So this is a company with a reasonable resource base at the moment that is poised to grow exponentially. It's a very target-rich environment, as I'll get into in a bit more detail. And also, the company in the last couple of weeks initiated a preliminary economic assessment for mining some of its at surface or near surface oxide gold resources. And I'll touch on that as well as we get further into the presentation. So in 2024, we have 20,000 meters of drilling planned, with another 10,000 meters of contingency. Some of the drilling is for metallurgical purposes and geotechnical purposes to support the PEA that will get published in the second half of this year. And some of the other drilling is for exploration and resource expansion. And again, we'll get into that in a bit more detail. So a bit about the corporate overview. Our main listing is the Toronto Venture Stock Exchange. We're also listed in Frankfurt under QXR2 and on the OTCQB under DAUGF. On a non-diluted basis, we have 195.5 million issued and outstanding, 12 million options, 49 million warrants, for a total of 257.7 million fully diluted. And there's a breakdown of the warrant schedule below. Some notable shareholders that perhaps some of your investor base might know: Orca Capital, Merck Investments, Ross Beatty, chairman of Pan American Silver, a quite well-known retail investor. Management and board own 8%. That number's going to be larger after this financing. And some other groups as well, such as Elemental Altus Royalty. Sonny Jandon, our chairman, major shareholder and supporter of the company financially, background in real estate development, but also in mining investment. Myself, Jared Scharf, I've been involved in the belt since 2011, when I acquired our initial land position of about 60 square kilometers. We've since grown it through multiple land acquisitions, public acquisitions, into a 440 square kilometer package over some of the most prolific features in the belt. Don Dudek, who's our technical director, a professional geologist, he's been active in the belt for 15 years. He was involved in a number of major discoveries, as well as M&A activity, which I'll touch on shortly. And then Christopher Marsh and Doug Engdahl, 2 independent directors. So for those of you who don't know, Mali is one of the most prolific gold producing countries on the continent of Africa. The most current data suggests that it's either 4th or 3rd largest in the belt, or in the continent. It has greater than 26 million ounces of reserves, Those numbers are still growing as most of the major gold deposits like Fekola and some of the new discoveries remain open and are going to get bigger with more exploration. So it's a highly prospective belt, but one of the things that really struck me when I first went there is still how underexplored the belt is. For such a prolific region, there are huge swaths of the region that remain either underexplored or not explored at all. So there's still tremendous opportunity. It's a young belt that's almost certainly going to get bigger. And the major producers are there. Some of the big guys, Barrick, B2, Endeavor, Allied, Hummingbird, and Resolute. And we'll show you exactly how we fit into that equation. So this picture really kind of tells a story of why we've been there and why we've been so adamant about consolidating ground. This is a regional image of the Western Gold Belt of Mali. It also dips into the Senegal side of the border. But really, there are two main structures, regional structures, that are related to all the large gold deposits in the region. The band here that's sort of shaded in gold is the Senegal-Mali shear zone, this north to south trending shear. This area here is related to 35 million ounces of reserves and resources. At the top of the belt, you have Allied Gold's Sadiola mine. Yatela was about a 3 million ounce, maybe a little larger than that. It's since shut in and been mined out. But Sadiola's 7.3 million ounces, still producing, and Allied's still doing a lot of exploration work and looking to expand and upgrade the production there and increase capacity. Going further south along this belt, outlined in yellow, this is our Senegal-Mali Shear Zone project. Like I said, it's 440 square kilometers of contiguous ground. And more importantly, it controls a 38-kilometer strike extent of the Senegal-Mali Shear Zone and 11 kilometers of a secondary feature known as the main transcurrent. This is, to our knowledge, the largest contiguous land package of any of the non-major producers in the belt. So, you know, we're a small company with an outsized presence in the belt from a land perspective. Going further south along the belt, you have Algon's Tabakoto Segala sister mines. All total, this is over 3.5 million ounces still into production. And I touch on this because our technical director, Don Dudek, was the vice president of exploration when this was owned and operated by Avian Gold until they were bought out by Endeavor in 2012 for give or take about 450 million. This is the importance of having technical individuals with regional specific experience, and Don is certainly the right man for the job. A little further west, just proximal to the Senegal-Mali Shear, is Barrick's Loulo-Gounkoto group of mines, a prolific producer, over 700,000 ounces last year, north of 15 million ounces combined resources between all the deposits. And this was previously Randgold's flagship project before Barrick acquired them a couple of years ago. And then further south along the belt, you've got B2 Gold's flagship mine, the Fekola mine. All told, that's 7+ million ounces. It's still open. It's still getting bigger. And they produced 600,000 ounces there in 2022. And then further at the bottom, Managen's Boto Diaka deposits. They recently bought them off IM Gold. And to my best of my knowledge, they're pushing forward to go into production. The secondary feature, that secondary belt, let's call it, is the main transcurrent. This is about a 10 to 12 million ounce camp. Endeavor Mining, Sabodala, Massawa Gora group of mines are situated proximal to it. This was previously Teranga before they acquired them in a substantial public transaction. And further south along the belt is Resolute's Mako mine. So we own a very large land package that's situated right in the middle of these two belts. And as you'll see, there's just a lot going on. So this gives you a little bit of a history of some of the M&A activity in the belt, just some basic metrics. I won't go through it in any great detail. But maybe touch on some of the more salient points. The average acquisition price was 210 million Canadian. There have been at least 8 or 9 very material transactions and several smaller ones as well. And maybe one of the most important metrics is the average price paid in terms of market cap per ounce in the acquisitions in this belt has been around $91 Canadian. Currently, Desert Gold's market cap per ounce of its existing resources below 10. And so, I think we're at quite a depressed point in the market from a valuation perspective. And, it presents the potential for a considerable upside. Maybe another major point is the average resource size upon acquisition of these companies was around 2 million ounces, and they were in various stages from PEA level to just resource level, some at feasibility study level. So it kind of varied, but the mark that seems to really get the big guys interested is that 2 million ounce threshold. Okay, so we're going to zoom in a little bit to our SMSC project. So this is a plan view, top-down view of the project. It's a bit of a technical image, so I'll just touch on the most salient points. The background is airborne magnetics, and really the major takeaway is that you have 2 different rock packages on one side of the shear. On the western side of the shear, where you see the red, you have altered volcanics. And on the eastern side, where you have the blue, these are more sedimentary rock packages. And where you have the convergence of these 2 features, a lot of really interesting things happen geologically and from a hydrothermal fluid perspective. So every purple dot you see on this image is a geochemical sample running between 200 ppb gold to 16,000 ppb gold, or 16 grams per ton. Every yellow dot you see is running between 50 to 200 ppb. So the major takeaway is there's gold everywhere. It's a highly prolific area. The black stars you see are gold zones discovered by drilling through various stages of advancement. In some cases, there are only a few holes and more work needs to be done. But in other cases, we have zones where we're getting more information. But I think the major takeaway is, scattered throughout the property, you have economic intercepts everywhere, and all these systems are open. And with more work, there's no question that some of them will be upgraded into resources. It's really a matter of how big can we make them and how economic are they. The larger gold stars are where our existing resources of 1.1 million ounces combined exist today. This is all within about a 15-kilometer radius, and in some cases, the resources are within a couple hundred meters. The largest deposit on the property to date is Mugia Far South at a little over 430,000 ounces. It's a shallow resource. It's open. We've got all indications in and around the area that we'll find more with more work. And then the other major area to focus on here is this northeast trend. It's kind of difficult to see with the soil geochemistry, but it's about an 8-kilometer trend of almost continuous gold mineralization, artisanal mining, and zones that have been discovered by drilling. This northeast feature is another major focus of ours. And then another sort of tier 1 target that we have is over here on the western side of the property boundary, where we have these 2 sister deposits, Gorbasi East and West. Combined, they're about 500,000 ounces. But we recently made some discoveries proximal to them to the north, where we have very wide zones of economic gold grade that'll almost certainly bear more fruit in terms of resources as we get going. So from an exploration point of view and strategy, the core objective is to delineate or discover a tier 1 gold deposit or deposits. In our mind, that's something that can produce 200,000 ounces a year for a minimum of 10 years. So think sort of 2 million ounce deposit or group of deposits. Management strongly believes that with more work, we'll get there. Switching over to the mine preliminary economic assessment, the PEA will focus initially let's call it the phase 1 in 2 areas. This Barani East area here in the middle, and this Gorbasi West here area here down south. And that's because we've got fairly wide, significantly sized oxide gold zones that happen at or very near surface. And the oxide tends to be free digging with much simpler recovery rates. And what we envision in this area are heap leach operations, which is a low-cost mining method. And as we speak right now, our crew is in the field with drill rigs, doing the geotechnical drilling for pit optimization, but also some drilling for metallurgy, something we call column leach testing. And that's essentially where you simulate the gold recoveries of a heap leach with the materials that you intend to mine. That drilling should go on for about another month. Once all that data is gathered, we'll begin the column leach process. And I suspect that the results of the preliminary economic assessment will be out in early H2. And management is optimistic that the economics will prove to be compelling. What we'd like to do upon finishing the drilling at the column leach after the preliminary economic assessment is to move the rig down here into this Mugiafara South area. Again, this is the largest gold zone we've seen on the property to date, and it remains shallow and open. And there's just so much noise in the area that we'd like to undertake about a 7,000 meter drill program. And the hope is that we can upgrade that resource significantly and potentially demonstrate the possibility of a tier 1 deposit in this area. This is a high-level breakdown, zone by zone, of the gold resources. I won't go through it in excruciating detail. It's there for those of you who'd like to reference it, but high level, we have resources in the central part of the property where we want to start the heap leach mining. We have another cluster of resources down here in the southern part of the property as well. And like I said, they're all relatively shallow and open in virtually every direction. This is just kind of a, let's call it our target model. One of the questions we often get asked is, as a small company with so many targets and such a large land package, how do we prioritize? And really, we have a model that's sort of two-tiered, where we have exploration targets where we have more knowledge geologically, we know where the system's going, we know how to target it and expand it, and it's more of a resource expansion, resource upgrading sort of exercise. And then the secondary sort of exploration is more target generation and discovery. And so we tend to run these strategies in parallel. And if something on the discovery side really piques our interest, it will move up the priority list and get put over onto the sort of tier 1 targeting, where we have some of the deposits like Mugiafara South, where we know they're economic zones that are going to get bigger. This is what we have planned in 2024. Again, it's a plan view of the property. Every yellow dot you see here is a color location for air core. The orange dots are color locations for RC drilling, and the red dots are color locations for core. The purple fences are auger, and auger drilling is a tool we use because so much of this part of the world is covered in something we call laterite, and laterite really has the effect of blanketing the geology. And so auger is a cost-effective tool to get under the laterite cover and test for new gold zones. And some of the most significant discoveries that have been made in this belt have been made by testing underneath laterite cover. So all told, it's about 20,000 meters planned, and about 10,000 meters of constituent drilling to follow up in real time. And, you know, if you can tell by the drill patterning, you can see the areas of priority and focus for us. You know, these are where we feel the highest likelihood of upgrading the resources and making new discoveries are. So to kind of highlight in summary, from an exploration perspective, you know, this is one of the best places in the world you can be, let alone to hold a regional land package. We've got a good start at 1.1 million ounces of combined resource. It's almost certainly going to get bigger with more work. And in the meantime, we're going to do a preliminary economic assessment on the, let's call it the low-hanging fruit on the project, which is the oxide zones where we have economic gold grades. We've initiated the preliminary economic assessment. Drilling is ongoing as we speak. We hope to have the results from the PEA early in the second half of 2024. And we hope to have a very active season of exploration drilling as well. So we should have really solid news flow over the next 6 to 8 months. And hopefully we can deliver on both sides with a robust economic study and also with some exciting exploration results from a drilling perspective. So Julien, I don't know if I missed any salient points, but you know, that's kind of it. It's pretty straightforward. Big land package, gold everywhere. And I think we've got a target model that's working and we know where to go.
Well, this is great to hear. Obviously, Jared, I don't think you missed any point. I think this your story is extremely straightforward. It's a proven camp. It's a proven belt. It's a proven everything. You guys are finding the gold. It's a question of adding the gold now, adding more drilling. Obviously, the 4 million exploration program, I think, is going to be a big step into that direction. And then, as we saw with another company that was presenting to us, which was Osino Resources,
Yeah.
I would say it in a very positive way, but it's a weightings game. It's a question of doing what you have to do, raise the amount of the tonnage, do the studies, do everything one step at a time, and then all of a sudden the one thing you know is that you've been taking over because the economics are good and the project is good. So there's no miracle success here. It's not going to happen overnight, but I think that what it shows this example is that by getting in early, by making sure that you're following the good projects, CEOs that are doing things right, well, then you just calmly wait for it, and then all of a sudden things happens. And sadly, this is the market we are in. Usually, quite a few decade ago or 2 decades ago, it would be an overnight success and share price bumping of 200%. Sadly, this is not the market we're in. However, it means that investors have to do more and more careful due diligence, separate good project from the bad ones, separate big promoters from small promoter. And it's not because you don't hear much about a project that it's not a good project. And so this is what's hard, obviously, on the investor side. So we're always happy to have you here, deliver result time after time after time. And so, yeah, so I didn't think you missed anything. I think it's a straightforward play. It's obviously no investment advice or anything like that. We don't do that. We just present the companies. But we obviously really like what we see, and this is why we invite you over and over and over again. So that being said, maybe if you can actually discuss a little more the Osino play, what happened there, the battle between the two guys, and what does it mean for you? Because somehow I guess it has to mean something important for your project also.
Well, I mean, you know, I follow the story sort of at a high level. First of all, I think the Osino management's doing a great job. And honestly, the biggest takeaway that I take from it is you're right. They built the property from a tonnage perspective up to a certain scale, size, de-risked it to a certain point. But one of the things that I think is interesting is that there have been a number of acquisitions over the last 3, 4 years that have gotten next to no attention, and it's largely been because they haven't been done at a premium. And so I think it's interesting and maybe a bit telling about the direction of the industry, that you're having some competition from an M&A perspective. We really haven't seen it in a long time, unless you're talking about, large caps, buying out other large caps. So no, I think I like seeing M&A on the African continent. I'd like to see competitive bidding, and I really like to see premiums. And what you touched on was correct, in terms of where we're at in the market. So it's a little slow right now, but the gold price is $2,000 an ounce. And so for companies like ourselves that are lucky enough to be in areas where most of the gold deposits you discover have a reasonably thick oxide profile cap to them, you can certainly make money heap leaching 2 gram gold in a $2,000 gold environment. And so, the idea is to fast track this small scale production, and something that could start off small, maybe 15 to 20,000 ounces a year initially, would generate more than enough cash flow to do all kinds of interesting things from an exploration and development perspective. And, I brought up this image here from our small mine presentation, just to really show the potential in just a small, tiny block of the project. I mean, this sort of outlined pit in blue, where the initial pit is going to start for the oxide, and the other outlined areas in yellow are all these other oxide zones that with more work can be incorporated. But if you were to step out again on an even larger scale to say here, this is just this area here. And we have almost another 8 kilometers of continuous oxide mineralization. We just need to do more work. So I think as long as we're diligent about continuing to invest in exploration while we run this small mine operation in parallel, that we'll be able to replace those resources and reserves and grow this thing over time. And in other words, it won't be a distraction from the core objective, which is to delineate a tier 1 gold deposit that is, maybe it gets us into a situation similar to Osino at some point.
Absolutely. More and more than that, I think that there needs to be some disruption in the business model that junior companies have right now. Bringing a small pit into production and generating cash flow separates you from being a junior exploration company to be a small cap producing, meaning you're de-risking all operation, you're de-risking metallurgy. I know it's a simple one. I mean, in Nevada, they make it work for 0.9 gram per ton leach. I mean, I don't see any problem for you guys doing it at 2 grams in Africa with lower cost and so on. And it also makes you secure social acceptance, everything that normally it is an unknown. Once you get to the production, you're going to be able to de-risk all that. So for sure, this will change a lot. I think the profile of your company, the profile of investors that are on board, even though you have almost 45% of major shareholders, if we add them up together, 43%. So we'll be looking very, very much forward to that disruption of business model and encouraging you and seeing of your result coming in the next few months. But for sure, it is extremely exciting, and it should be exciting for future investors or current investors.
Yeah, no, I appreciate it, Julien. I think it's I'm very pleased with the direction we're going. Let's just put it that way.
Absolutely. Well, that being said, I'm happy you're pleased. This is your closing statement, so I'm pleased with the way the company is going. Is a good one. We thank you very much again for joining us, Jared. We're going to be surely you're going to come in the next one, and we'll be following your success, exploration, everything, the studies, and so on. And yeah, talk to you in a few months, I guess.
All right. Thank you very much, Julien. Appreciate it. Thanks for having me.